Good day, investors. Bloom Energy just reported their Q2 results, and the numbers are big. Revenue came in at over $1.06 billion. That's up 165% year over year. They also expanded margins, delivered strong operating leverage, and raised full-year guidance to roughly double revenue for 2026. In this video, we're going to break down the full earnings print, look at the updated guidance, and then zoom out to the longer-term investment thesis, especially how Bloom is positioned in the AI-powered demand wave. After that, we'll look at some price targets and valuation, and finally, I'll give you my personal take on why I like Bloom Energy stock right now. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Let's start with the headline numbers from Q2. Revenue came in at $1.065 billion, up from $401 million in the same quarter last year. That's a 165% increase year over year, more than doubling the top line in a single quarter. Gross margins also expanded nicely. Non-GAAP gross margin hit 34.3%, up 604 basis points from 28.2% a year ago. The real standout is the operating leverage. Non-GAAP operating income came in at $239.6 million, roughly 8.4 times higher than the $28.6 million they reported last year. Adjusted EBITDA was $253.4 million, up about 6 times year over year. And non-GAAP earnings per share came in at 78 cents, compared to just 10 cents in Q2 2025, nearly an 8 times increase. So across the board, revenue, margins, operating income, EBITDA, and EPS, this was a very strong quarter for Bloom Energy. Now let's look at the full year guidance, because management raised the outlook significantly. For 2026, Bloom is now guiding revenue of $3.9 to $4.2 billion. That's roughly 100% growth year over year at the midpoint, essentially doubling the business in a single year. Non-GAAP gross margin is expected to come in around 34%, which would be an expansion of about 374 basis points. On the bottom line, they're guiding non-GAAP operating income of $800 to $900 million. That's nearly 4 times what they delivered in 2025. And non-GAAP EPS is expected between $2.55 and $2.85, roughly 3.6 times higher year over year. So this isn't just a strong quarter, they're raising the bar for the entire year on both growth and profitability. If we zoom out and look at the multi-year trend, the acceleration becomes even clearer. On the left, you can see revenue growing steadily from about $1 billion in 2021 to $2 billion in 2025. Now management is guiding $3.9 to $4.2 billion for 2026, essentially another full doubling in a single year. On the right, non-GAAP gross margins have been climbing consistently, from 22% in 2021 up to 30% in 2025, and now expected to reach around 34% in 2026. So this isn't just a one-quarter spike. We're seeing a multi-year pattern of rising revenue combined with expanding margins, and the 2026 guidance continues that trajectory at an even faster pace. This next slide really shows the operating leverage kicking in. On the left, you can see non-GAAP operating expenses as a percentage of revenue steadily declining, from 26% a few years ago down to 19% in 2025, and expected to fall further to around 13% in 2026. At the same time, on the right, non-GAAP operating income has gone from losses of around $30 to $40 million in 2021 and 2022 to $19 million in 2023, $108 million in 2024, $221 million in 2025, and now management is guiding $800 to $900 million for 2026. That's a clear picture of a business that is scaling efficiently. Costs are becoming a smaller portion of revenue, while profits are ramping significantly. This is exactly the kind of leverage investors look for as a company moves into a higher growth phase. All right, so those are the Q2 numbers. Now let's zoom out and talk about why I'm actually more excited about Bloom Energy over the next several years than I am about any single quarter. What we're watching is a structural shift in power demand, and AI is the catalyst. For years, power demand was basically flat. Renewables were the story, fossil fuels were out of favor. That's flipped. Demand is exploding, grid power is increasingly unavailable or delayed by years, and renewables simply can't deliver the always-on, dispatchable electricity that AI data centers need. Bloom's own data center survey shows developers' expectations for 100% on-site generation have skyrocketed, 33 times higher for 2030 targets in just a year and a half. Bloom sits right in the middle of that gap. They make solid oxide fuel cells that convert natural gas, or hydrogen or biogas, into electricity on-site without combustion. No big turbines, no multi-year permitting battles in many cases, and delivery as fast as 90 days. The systems are modular. Same Bloom box scales from a small commercial site to multi-hundred megawatt or even gigawatt scale deployments. They're quiet, nearly zero NOx and SOx, highly reliable, guaranteed uptime from 3 nines up to 5 nines, and they can load follow the spiky, real-time demands of AI workloads. That's a powerful combination: speed to power, modularity, reliability, and a cleaner profile than traditional generation. The company already has manufacturing capacity that can scale to 5 gigawatts as needed, with facilities in Fremont and Newark. And they're future-ready: heat capture, carbon capture, and direct DC output that matches the next-generation 800-volt data center architectures developers are already planning. The customer base is broad: hyperscalers, data center developers, colos, semiconductors, neoclouds, plus traditional commercial and industrial users. The secular demand is real, the product fits the new constraints of the market, and the company has already shown it can grow revenue aggressively while expanding margins and generating cash. I'm not saying every quarter will be smooth, but the long-term setup, AI-driven power scarcity meeting a modular, fast-to-deploy, high-reliability on-site solution, is one of the cleaner multi-year growth stories in the energy space right now. That's why I'm bullish on Bloom as a longer-term holding. That's the opportunity. Let's keep watching how they execute. So after looking at the long-term investment thesis for Bloom Energy, let's check what Wall Street is saying on price targets. According to stock analysis, 29 analysts polled by S&P Global have a consensus rating of buy. The average 12-month price target sits at $286. That's roughly 72% upside from current levels. The high target is $390, which would be more than a double, while the low sits at $70. Median target is right around $290. Overall, the street looks constructive. Both the average and median point to solid upside if Bloom keeps executing on the AI power opportunity we just covered. Now let's look at how the market reacted and where the stock currently stands. Bloom closed the day at $166.84, down about 11%. However, in after-hours trading, it bounced back to around $186 following the earnings release. Even after the pullback, the stock is still up nearly 386% over the past year. The 52-week range runs from roughly $33 to a high of $351. At current levels, the market cap sits around $47.5 billion. On a trailing basis, the PE is elevated at about 194, but the forward PE comes down to roughly 66. For a company that's guiding roughly 100% revenue growth this year, with expanding margins and strong operating leverage, that forward multiple starts to look more reasonable, especially if they continue executing on the AI-driven power opportunity. So to wrap everything up, Bloom Energy just put up a very strong quarter with revenue more than doubling year over year, meaningful margin expansion, and clear operating leverage. Management also raised full-year guidance significantly, now pointing to roughly double the revenue and nearly 4 times the operating income compared to last year. When you layer that on top of the longer-term opportunity, the massive and growing need for reliable, fast-to-deploy on-site power driven by AI data centers, the overall setup looks compelling. The stock actually rallied after the earnings release, which shows the market liked the numbers and the raised outlook. At these levels, I remain bullish on Bloom Energy and like the stock here for the longer term. If you found this video helpful, Remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching and happy investing.